everyone. Welcome to Sam's Summaries. This episode is a deep dive discussion into Sam Fury's summary of Chapter 6 from the book Crypto Swing Trading by Jide George. It has been created with the help of AI. The chapter is titled Market Cycle Trading. You can read the original post at samfury.com.
All right, so you're here because you want to ride the crypto wave,
Right.
make some serious profit in this crazy volatile market.
Well, you've come to the right place.
Today, we're diving deep, like really deep into market cycles, and we're going to figure out how to make them work for us, not the other way around.
Exactly. It's all about swing trading.
So we're using an awesome book as our guide. It's called Crypto Swing Trading, written by Jide George.
Specifically, we're going to crack open Chapter 6, Market Cycle Trading. That's the juice.
So think of this deep dive as your crash course in surfing the crypto market. We'll break down exactly how to identify those perfect moments to buy and sell, to ride those waves to, hopefully big gains.
Sounds good. Let's go.
All right, so first things first, we got to understand what we're dealing with here.
Right. The market's always moving. It's like the ocean.
And sometimes it's calm, sometimes it's a storm, right?
Exactly. So we've got these different phases we need to recognize.
Bull markets, bear markets,
Right.
those consolidation phases in between. It can get kind of confusing.
Sure, yeah, but don't worry. It's not as complicated as it seems. Think of a bull market like, a rocket launching into space.
Prices are going up.
Yeah.
Everyone's excited.
Lots of momentum.
And then we've got the bear market, the come down.
Right. Things cool down, prices start dropping.
Maybe a little scary for some people, but remember, that's just the cycle doing its thing.
Exactly. And then there's times when the market just seems to be chilling, not really going up or down, just kind of sideways, yeah. That's consolidation.
So knowing which phase the market's in is like the foundation of swing trading, wouldn't you say?
Absolutely. Got to know what you're working with.
All right, so let's get tactical. Let's say we're in a bull market, things are heating up. What are we looking for? What are the signals?
All right, so imagine you're looking at a chart and you see this coin. It's been stuck around, say, $10 for weeks.
Okay, I'm picturing it. $10, not moving much.
Exactly. But then, bam, it jumps up to $12. Breaks through what we call a resistance level.
Hold on, resistance level. Now, I've heard that term thrown around a lot.
Yeah.
But,
So think of it like a ceiling. The price keeps hitting it, but it can't seem to break through.
got it.
That's because there are a lot of sellers at that price. They're putting pressure on it, keeping it down.
Okay.
But when the price finally breaks through with, a good amount of volume, it's a signal. The buyers are in control now.
All right, so this is it. This is where we hop on board, catch the wave.
Exactly. Ride that momentum upwards.
But even the best surfers wipe out sometimes, right?
Definitely. Crypto can be unpredictable.
So how do we protect ourselves?
That's where stop loss comes in.
Stop loss.
Yeah, it's basically an insurance policy for your trade.
Interesting.
You set a price, and if the market turns against you, your coins are automatically sold at that price.
So let's say I set my stop loss at $11.50.
Okay, so even if the price drops, you limit your losses to that 50-cent difference.
Makes sense. So we're in a bull market, riding high, catching waves, but then things start to change.
Right.
The market shifts.
The tide turns.
We enter a bear market. What happens then?
Well, a lot of people, they panic.
Yeah, I can imagine.
They start doing something called short selling. Basically, they're betting on the price going down even further.
So trying to profit from the downturn.
Right.
But you're saying it's risky.
Yeah, it's super risky, like extremely risky.
Yeah. Why is that?
Because if the price keeps going up instead of down, you can lose way more than your initial investment, like a lot more. There's no limit to how much you could lose.
Okay, so short selling, maybe not the best move in a bear market.
Right.
So what do we do?
Well, there are safer strategies, like range trading.
Range trading. What's that?
So picture the price bouncing between a floor and a ceiling.
All right.
Those are your support and resistance levels. You buy near the support, sell near the resistance, and profit from that smaller price movement.
So instead of catching the whole wave, we're riding the smaller ripples within the bigger trend.
Exactly. It's a more controlled approach.
And what about dollar cost averaging? I've heard that term a lot too.
Ah, yes. So let's say you believe in a coin for the long term.
You think it has potential.
Right. But the price is dropping. Instead of buying a huge amount at once, you buy smaller amounts regularly.
So spread out over time.
Right. That way, you average out your purchase price, potentially getting a better deal overall.
Got it. So we've covered bull markets, bear markets. But what about those consolidation phases where the market seems stuck?
Right. Those are interesting.
We talked about range trading being a good strategy here. But,
So you want to look for areas on the chart where the price has bounced off multiple times before.
okay.
Like it hits that same level and then bounces back.
Mm-hmm.
Those are your support and resistance levels.
Hmm.
The tighter the range, the more reliable those signals tend to be.
So a tight range means less risk, but probably smaller profits too, right?
Right.
Higher risk, higher reward.
Right.
Lower risk, lower reward.
Right. But remember, with a tighter range, you can often use something called leverage.
Oh, leverage.
Yeah, it allows you to amplify your gains, but it's also riskier. You got to be careful. It's like using a bigger surfboard.
You can catch a bigger wave, but you could also wipe out harder.
Exactly. And don't forget about volume. It's a key indicator.
Volume?
Yeah, like how much the coin is actually being traded.
Okay.
If you see the price breaking out of that consolidation phase with high volume, it could be the start of a new trend, bullish or bearish.
Got it. So we're looking at the price action. We're paying attention to volume. You mentioned something earlier about looking at different time frames.
Oh, yes, that's crucial.
What's the importance of that?
Okay, think of it like zooming in and out on a map.
Okay.
The daily chart might show you the big picture, an overall downtrend, for example. But if you zoom in, look at the 4-hour chart, you might see short-term bullish setups, opportunities within that bigger downtrend.
So even in a bear market, there might be chances to catch those smaller waves.
Exactly. It's all about perspective.
And context.
Yeah.
Right. Right. So we've covered a lot of technical stuff here. Charts, patterns, volume. But there's another element that we need to consider. Market sentiment.
Oh, yeah, that's huge.
Like the mood of the crypto community. How do we factor that in?
Well, imagine you're reading the headlines and it's all doom and gloom. Social media is full of fear and negativity.
Okay, I'm picturing it. Panic in the streets.
Right. That extreme fear can actually be a good buying opportunity.
Really?
Yeah, it's like contrarian investing. Buy when everyone else is selling.
Interesting. Go against the crowd.
Right.
And on the flip side, if everyone's overly optimistic, prices are skyrocketing, everyone's talking about Lambos, maybe that's a sign to take some profits, right? Before things get too crazy.
Exactly. It's like knowing when to leave a party before it gets out of control.
So to sum all this up, swing trading in crypto is about recognizing those market cycles, choosing the right strategy for each phase, and managing your risk every step of the way.
Absolutely. It's like a dance.
A dance with the market.
Exactly. And don't forget about those fundamentals. Do your research on the coins you're trading. Understand what they're about, what their potential is. That's going to give you a big edge.
Great advice. All right, here's something to think about as we wrap up today. Think about your favorite coin, the one you believe in. Knowing what we've talked about today, how would you approach swing trading that coin? How would you identify those perfect entry and exit points to ride the waves to profit?
Keep those charts handy, pay attention to the sentiment, and remember, every cycle is a new opportunity.
Happy trading, everyone.
See you next time.
Bye.
Bye.
Thanks for tuning in to Sam's Summaries. If you found this episode useful, let us know with a like, follow, and share. Also, if you haven't already, be sure to visit samfury.com to get free access to all of Sam's original summaries. You can also get any of Sam's books and other exclusive content. It's all completely free at samfury.com.